Okay, so dear participants, let me introduce today's expert of the session. We have Professor A. Thangaraja. He is assistant professor at VIT Chennai. He did a PhD, MBA, PGDMM, and he also having 10 years of teaching experience and 2 years of industry experience. He qualified UGC NET and SET, and I also happy to inform you that he registered patents, 4 patents in the area of data analytics. He is the expert of data analytics and the business analytics and marketing analytics and people analytics. He also worked on softwares, statistical softwares like SPSS, MOS, Modeler, NVivo, and RStudio and Python, etc. So he also published so many publications in international journal and conferences, and he he presented so many papers in international conference. So I heartily welcome Professor Thangaraja. Over to you, sir.
Thank you, sir. Thank you so much, sir. Thank you so much, Naveen, sir. It's a very good introduction. Thank you. So, first of all, I would like to thank GTU and the Naveen sir and other organizers for giving this opportunity to share my knowledge with the great learners here. So I believe the PPT is visible.
Yeah, it is visible, sir.
Okay, sir. Okay, sir. Okay. So now is it visible, sir? So while I'm moving on.
No, it is not moving, but yeah, your cursor is moving.
Okay, fine. Right. Yeah. So, right. Fine, sir. Right. So today I'm going to discuss about data analytics in FinTech. Actually, financial technology, right? And FinTech is future of all financial sectors. So first, let me discuss about this FinTech as an overview. Then I'll move on to this data analytics. Especially today, I'm going to discuss about fraud analytics. So because fraud analytics is the very emerging and very needed aspect in FinTech. So with that, let me move on to this session. So an overview of Indian FinTech ecosystem. Here you can see that these are the very active companies and very known companies in FinTech of Indian market. So you can see that there are several segments here: payment segment, lending, insurtech, and investech, blockchain, and other services also. All these financial companies, these FinTech companies are actively participating, and they are moving ahead in their ladder. And because of these companies, these private companies, the FinTech is moving on to the next level in India. Right. So why should I speak about only Indian FinTech companies? First, we will discuss on this Indian scenario, and we will discuss on the global scenario also. Yes. See, you can see that all these, if you remember the finance, especially the traditional way, the way we were doing finance and the way we are doing now, there is a huge transformation you can find. Not only that, with the technological invention, with the technological emergence, you can see that there could be a greater level of disruptions in all the sectors, So finance is not going to be an odd one out. They are going to be highly impacted by this technology. So that's why this finance sector is going to be, it's already been there, right? Highly, they are going to be, heavily impacted by this FinTech technology aspects. So what are all the technologies and how are they going to impact them, and what are all the pros and cons, and how should we prepare for this for the future directions, and we need to ensure that, and we need to be proud that we are the third largest FinTech in the world. comparatively with other countries, our fintech solutions are great, and we are doing a very good job in the sector of fintech. So these are the companies, all the on the whole, we need to understand this, right? Okay. Then the expansion level. Just you look at this expansion level, right? All these fintech companies from Paytm to small case, you can see that all the companies they started expanding their offerings. Actually, Paytm started core offering of payments and wallet. They were just facilitating the payments, and they were becoming the wallets, and they were facilitating the end users, consumers. But now they have moved on to the different segments of finance, right? They have done e-commerce, they have gone to the investments, mutual fund, gold, and FDs, and you can see that equity broking also they have done, and offline merchants, yes, value-added services, they started doing that. Consumer internet they have started, and consumer lending, offline merchant lending, right? You say anything, they have started. So same like this, many companies in India. India is a biggest market, obviously. So they have entered into so many different segments. All this because of the technology. Because of this technology, yes, technology is being disruptive in many times, right? But we need to agree that without technology we can't survive. See, it is a prediction that every 20 years there's going to be a disruption because of the technology, right? The 20 years is going to be now, it's getting reduced. 10 years, 5 years, right? It's going to be very soon. The technological disruptions is happening very quickly. So the companies needs to be very proactive, and they need to understand that what the platform they are planning. If it is a consumer lending platform or consumer client lending, right, what kind of platforms they are planning and what kind of disruptions is going to happen, they need to be ready. Right. So with that huger level of stretch with their expansion streams, you can see that these companies are finding a new ways to serve the people in terms of finance, in terms of the yesterday, right? I could see that yesterday one of my one students of mine, a team of them were ready to invest 70 lakhs, and they were coming out with some split pay ideas, and they are doing a lot of new they are engaging with the new startups, and they are highly involved with this fintech. We can see that it's very visible that fintech companies are expanding their wings like anything. This is so visible. From here we can see that all the companies are expanding, right? So this is one more thing we need to understand. And Indian fintech companies, right? Here, what is their position actually? India fintech in 2020, we had early stage fintechs, 1,800 plus. Now the early stage is 2,300, and minicons. I believe everybody knows about minicons, unicorns, and sunicons and all, right? Minicons is about 1 million plus turnover. A company which is going beyond that 1 million turnover, right? They are known as minicons. We have got we were having 200 minicons. Now it is increasing to 50. So the companies are performing well. Century Club, it's about 39 were there. Now it is 70. It's almost doubled. And you can see that Sunicons, right? Sunicons is almost it's almost about they are going to be very near to that unicorns. Unicorns is about 1 billion. What are the companies which are reaching beyond 1 billion turnovers? They are known as unicorns. The unicorns is about their probability of reaching this unicorn level is high. Though we had 5, now it has been 15, and Decacorn is about 100 billion. So we had 1 in 2020, but now it's been 4, and I believe it is increasing greatly. And these are just an overview from my side. You can see that the companies are increasing their level of performance And the number of companies, the participation also in the industry is increasing. See, when the participation is increasing, when the competition is increasing, parallelly, we have got other threats also that we will be discussing in the further slides. So here, 3 new decacorns and 8 new unicorns over next few years. It is predicted that it's going to be there. Definitely, it's going to be there, right? And the companies are reaching their levels. 50 plus new fintech to realize US dollar of 100 million valuation till 2025. It is also predicted 50 plus companies and 20 to 25 billion of investment flows to capitalize this potential. See, this is a scenario of Indian fintech, right? See, if it is going in this way, right, we will definitely become the topmost in the world. And the level of fintech adoptions that we are going to take, the segments that we are going to follow, and what are all the investments that we are going to make, and the participation from the startups. The startups, the early stage fintechs, you can see that it is increasing, right? Almost from 1,800 to 2,300, and it is projected that it's going to be in a few folds in few years. So we are actively contributing to this fintech sector. So this is the scenario that we need to understand. And some of the very inevitable trends are, it's already there. We have started using this. It's already there. Digital banking, automation of all banking services through the use of various digital platforms has been fascinating. It's really very interesting to have this kind of all the services. You mention any service, right? You mention any service that is going to be in digital, right? Even digital lending is going to happen. Digital lending, within a 1 day, the loan process will be happening. You don't have to visit any of the banks. Everything will be happening digitally. So from loan services, depositing, and everything. So it's going to be a complete digital banking. That is trended. Is many of the banks are transforming themselves into this digital banking services. And when it is about shifting yourself from banking to digital banking, we need to understand that there is huge requirements of software support. So banking as a service, it was a software as a service. Now it's going to be banking as a service, BaaS, right? It's going to be it's going to be a flourishing one. There is a huge requirement for technological support. And as of now, the third parties are helping with the company banking sectors, but it's going to be the fintech enablers, and the core people will be there in the company, in the banking streams itself. Not only the banking streams, in financial companies and other financial institutions also. So Open API, it's like other enabled payment systems and unified payment interfaces, mobile wallets, digital banking experiences. See, one more very important aspect when you are speaking about digital banking, the companies are also focusing on the user experiences. It's becoming more of a customer centric. The experience is going to be everything hereafter, right? So what happens is, while the capital investments on technology, they are focusing on the customer centricity also. So in such a way, these fintech trends are going to be a trend, game changer in all the ways, the B2B or C2C, B2C, any kind of business models, it's going to be there. And digital payments, you can see that it's very visible that digital payments have soared by 10.5 times in the last 5 years, with an annual payment run rate of $450 billion, right? 30% of retail spends now through digital means. And I don't know what to say what to say for this pandemic. Because of this pandemic, the digital aspects in every industries has got a different dimension. See, we have moved on to several years ahead, and we have started adopting all these new disruptions, new technologies, and whoever was very stringent of adopting technologies, now they have no other way. They have to take this technology for the survival itself. They need technology. It becomes like that. So I can't say thanks to pandemic, but we need to understand that pandemic had made this digital world is going to be very flourishing, right? So potential loan service providers. See, here we need to understand the small merchants to SMEs, invoice-based, retail-based, n number of highly performing companies are engaging with loan service providers in India, especially. All these companies are as per their level of the segments that they have engaged. See, the way of loan provisions are great. With that, it is streaming. It's moving on to a greater level. So you can see that small merchants are there, SMEs to the retailers, everything is going on, right? So now, to the participants, I believe you are listening to the lectures, no? That discussion that I'm making. Can you read this, and you can go to this particular URL, and you can scan it also. You will if you're having mobile phone, you can scan it using this QR code. You can give you can select your options. What is challenging now? What do you feel, right? See, we have discussed. I have given an overview of fintech companies in the India in the present scenario. So what is challenging now? Is it going to be fraud, technology, or data? Which one is going to be a very challenging task for you to deal with data, or to deal with technology, or to deal with fraud? So can you give your answers here? Let me move on to that answering window. So that, let me see. Yeah, I have got an answer. Please, you can, for your benefit, I'll do one thing. I'll share the URL in the chat box also, so that it will be easy for you. I'll share it in the chat box. I think I'm not.
So chat box will not be accessible.
Yeah. For
Yes,
me,
yes.
yeah, as I'm a guest, so I'm not able to
That's
share
fine.
it. Yeah.
That's fine.
So yeah, you can use this QRL, right? Or QR
You can
code or
share.
URL.
You can
Yeah.
share in our WhatsApp group if you have joined, I think.
Yes. That I
Yeah.
can do, sir. Thank you.
Yes. Okay.
Yes, sir. So I'm already there in the WhatsApp group. Okay, I'll share it there. I have received one answer as of now. Okay, I'll do one thing. I'll share it in the WhatsApp also. I'm looking for more answers. We can have an interactive session. What do you think is going to be a challenging one? One minute. I'm just trying to share it. Okay. I think yes. Okay. I have shared the URL in our WhatsApp group, and as well, you can see that I'll share the QR code also. Just give your answers. I would be happy to interact with you. You can scan it, and okay, let me check how many answers we have got so far. Very good. There are very good level of answers, right? Let me share it there. Let me share the answers here. Okay. Two people are saying handling fraud is going to be a challenging one. Two people are saying that data is a challenging one. One person is saying technology is a challenging one. Right. Okay. Thank you. Thank you for your input. Right. So we will move on that. So with that, let me move on to that slide. Yeah. So what is going to be challenging? That's what my question is. And fraud, technology, and data. Yes. So now we are going to discuss about fraud analytics. Yes. Why fraud analytics first? Why should we have a fraud analytics? How many of you have experienced when you are trying to do transaction, especially credit card transaction, have you got any kind of fear that whether my credentials can be stolen? Have you got any kind of fear, or have you?
Yes,
Yes,
sir. Yes, sir. Yes, sir.
yes,
Very
yes, yes,
true. Very true.
yes,
And
yes,
even
yes,
once I had a very, bad experience with Paytm also, even though I was not using Paytm,
yes.
my credentials were logged in and I had a very tough experience, I would say.
Yeah. Thank you, ma'am. Right. Uh, Drudisha, ma'am. Yes. And many of us, see, even though we are growing in a greater way, right? All our companies are growing and they are investing heavily, but we need to accept one point that we need to improve our security system, cyber security systems in a greater level. Okay, so see, you won't believe all these companies are investing heavily on detecting frauds and preventing frauds, because see, for these companies, the investment is not going to be a challenge for them. Getting techies is not going to be a challenging for them, right? Transforming their all the sources into a digital form, it's not going to be a challenge for them, right? That means handling data, handling technology is not a problem for them. The only problem that they are going to face, and they feel it, is fraud. Only the human is a problem for them, right? Ultimately, right, humans, right, is the problem, because you can handle everything in the world, right? Even you say that artificial intelligence or anything, right? But handling a greater level of things you can handle, but handling a small baby is difficult because of the behavior. So behavioral patterns is going to be a challenge for all these fintech companies. How can you predict that? Is it that much easy to predict humans' behavior? Is it easy, or can you create one fixed model to predict fraudulent activities? No, that is the challenge, right? So with that, right, I'll move on to the session with these. What is fraud analytics? What are all the techniques that it is used? And see, and we need to understand one thing. Many of the advanced techniques that is really applied in the banking and other financial institutions, they are far beyond the way that we are imagining. But right, so what are all the basics that I can cover it here? Okay, so with that, we are moving on to the next slides. So why fraud analytics? All these reasons that I mentioned, because of that, it's going to be right. These are the reasons. If you want a very clear-cut points, 47% of companies experienced a fraud in the past 24 months. So you need to understand that you are not alone. Not even an individual is facing a problem. Even companies are facing problem with the fraudulence. Many of the times, what happens? We used to scold the we used to blame the companies. Immediately, this company did this because of the poor service they did this, right? I lost money because of this company. They stolen that, right? That's what we know as a consumer, as a very layman perspective, we can understand that only. But the reality is different. The companies are struggling much to save your money. So in fact, all these charges that they are increasing, they have to invest on the security purpose only, right? So see, 47% of companies experienced a fraud in the past 24 months. Okay, nearly half of the companies. So every company is going to be there. 6 is the average number of frauds reported per company, right? So average is 6. Every company is facing a 6 frauds, and every year, or you can say that there is no duration that, right? Only 56% conducted an investigation into their worst fraud incident. The problem is, this is the case, right? Have you started your investigation on the fraud happened with the company? Many of the companies, what happens is they do not turn back. So this is a very worst scenario if the companies are not concentrating on the fraudulent incident happened to them, right? Because what will happen is, if they don't do any preventive actions now, ultimately they'll be in a problem. See, just if you don't do anything now, the fraudulent activity will start consuming you. Ultimately, they will consume the company completely. So they have to be very proactive. The companies has to be very proactive on fraudulent incidents. The 5% average loss is a loss in the revenue. You can see that 5% loss because of this fraudulent activities. So this is going to be the biggest threat for all the fintech companies, so that they need to face. Yes. Okay. We will understand what is fraud first. Fraud is an act of deception used illegally, right? We know that what is that, right? Okay. And we need to understand, when you speak about fraud, 4 common things, 4 elements of fraud. That is, the fraud is uncommon. Fraud is uncommon. Fraud is not common, right? Because we have a common pattern. When fraud happens, you can see here there is a different pattern there, right? Just keep it in mind. Fraud is uncommon. This is the tip for us. We need to trace the fraud. Fraud is uncommon, and it's concealed. It's happening in a very secret way, so it's very difficult to trace them, and changing over time. See, while the fintech companies are improving their technological knowledge, technological investment, meanwhile, the fraudsters are also investing on their knowledge on technology, their pattern of doing fraudulent activity. All these things are changing. So it's a continuous process. It's not about one time you are doing a fraud detection and a fraud prevention activity and leave it forever. No, it's a continuous action. You need to continuously make a investment on fraud detection and fraud prevention. And what happens is, many of the times fraud are organized. We used to think that frauds are unorganized. 1 or 2 persons are doing there and one group of people are doing that. No, right? Around the world, right? It's becoming a network, and it is highly organized now. So when the people are engaged with an organized way of fraudulent activity, it is becoming much more challenging thing to prevent it for the companies. So this is the fact we need to understand. Types of fraud is online fraud, right? Your internet, and when you are moving on to the different websites, you can see that all these frauds, they are stealing your credentials, your informations and everything. And credit card fraud, yes, we are going to discuss about this in detail, how is going to happen, and other threats and theft of inventory also, it's going to be in the fraud activity. Right, when I speak about this credit card, right, we need to understand that we have two-factor authentication, right? Anyway, right? How can they steal, right? If I have my PIN number here, right? When I have this one-factor or two-factor authorization, that means OTP, one-time password, right? They need to every time when a transaction is happening, they will be sending me a message, and I need to give them the code. Then only the transaction can happen. So, but what happens is when it is in a globally, you can see that in some countries the cyber law is different. What happens in you say that South Africa or Korea, there the cyber law is different. The international cards that you are using, right? They need to know only your basic credential, the card number, and your name and the expiry dates, all the basic things. If they know that, they can steal the money from you. In fact, in dark webs, all these are available. You can spend 5,000 rupees and you can get 25,000 rupees of credit card details, right? So this is how it is happening. How these companies, fintech companies, are going to deal with this, right? Okay, some common other examples of fraud. It's insurance fraud. Also, we know that. See, when it is about insurance fraud, we are not speaking about only the investments in the online or digital, frauds, digital, invasions, digital stealing. So there are other patterns also. When it is about business, when a company is, when an insurance company is giving an insurance, right? I remember one incident. I'll share it to you, right? In some part of India, right? They have banned. It's in law, right? It's been banned that the spouse cannot take a greater level of, for example, more than 1 crore. If you want to take a 1 crore of insurance, life insurance for your spouse, right? You need a special permission. Actually, it's not given easily. Why? Because it happens in many times because of the past experience. They used to take life insurance on the wife and they used to kill them, and it happens. So because of these past experiences, they have learned and they are changing and modifying it. But we need to understand that it is a very slow learning process. We need to be in a real-time learning. We need to be in a very proactive. So this is an example of insurance fraud, credit card fraud, identity theft, right? They are stealing your identity and earning through that. Money laundering, tax evasion, n number of things are happening, right? All these financial institutions that are dealing with these transactions and the servicing of loans, they have to deal with this heavily, right? So how companies deal with fraud analytics, right? The fraud analytics team usually often uses a rule-based system based on manually set threshold and experiences. What happens? See, if a company is there, they might be having some rules. Like I told you, for insurance company, they might be having, based on the past experiences, they used to have some standard rules. They'll be following only those rules. But as I told you, frauds are different. Frauds are uncommon and they are highly upgraded, right? So if you are having a set of rule, it is very transparent to everybody, then they will change the way that they are doing the fraudulent activity. So rule-based systems based on a manually set threshold and experiences is not going to work out for prevention of fraud activities. So what we need to do, see, what actually they are doing is they used to check the news. They receive the external list of fraudulent accounts and names, and sometimes they used to use machine learning algorithms to detect fraud and suspicious behavior. So this is what is happening with the companies in the present scenario. But big data. So when I speak about data, right? This is the thing we need to be very clear on this aspect. The data is going to be the input or the tool for dealing with this, especially right, dealing with this fraudulent activity. So how these companies are going to deal with the frauds, and how are they going to adopt this fraud analytics in a very successful way? See, the big data is the key for them. See, usually what happens, all the industries are struggling with the concept of big data, actually. So, see, with the servers across the country capturing tens and thousands of terabytes of data each day, and regarding all the facets of business, now what happens? The challenge is not finding usable data. Are you getting a very relevant data? There is a challenge on that. The challenge today is how to effectively review and manage the data you have, because you are given with n number of data, and you need to understand that which data is going to be useful for you, and you need to screen it, and you need to identify the very relevant data. So, and it's very important for the fraud examiner, especially right, the people who wants to understand the fraudulent activity, how data is collected, what are the some of the specific tools and techniques that help you to locate the fraudulent activities in the business. So those are the essential factors the companies needs to identify. And what are the some of the the techniques that we will discuss in the upcoming slides. So it will flourish, and ultimately, once if you let the fraudulent activity happen, and if you do nothing, it will start flourishing, and ultimately it will consume your total business itself. So this is an alarming thing that all the companies needs to be very proactive, and it is amazing when you see that, right, how a fraud perpetrator can find the hole in a system. So that we need to understand. See, for example, failures may occur within internal controls, such as even duties are separated, people work, and how are they dealing with this system. And see, what happens is many of the times in the internal controls itself, the people will steal the other people's mail ID, right? The other credentials, and they will use it for the fraudulent activities. So all these patterns we need to identify. So it is not that you are monitoring only the external aspects of threat. The threat is internal also. So internal controls also you need to monitor it. So it is about 360-degree a kind of monitorization you need to take up. So if employees or vendors know that an organization is conducting vigorous tests to detect fraud, that may cause them to think twice about committing it. Is it correct? So that's what the companies should portray to the people, that they are fraud proof people, and they are having a very stringent notice on these fraudulent activities. That's what they need to start with that. And when designing data, so when designing itself, the data analyst, they must think about the various operations of business, and how they are vulnerable to the fraudulent activities. That you need to think about. So the whole business model is to be monitored, and you need to start with that. That's what we need to understand from this big data concept. So because when it is about big data, we need to be very, it's going to be very crucial for fintech companies because it is flooded with n number of data aspects. So in such a way, we need to be double cautious on this big data aspects. Yes, the spending that you are going to do with big data is also a factor, right? Data analytics tools. When I say about data analytics tools, what all the data analytics tools are used against identifying frauds? For example, see here, analytical review is happening. Usually, suppose the last year sales is $1,000 and the cost is 750. Right, the cost to sales ratio is about no 75%. We can say that. Right, the next year, the sales is same 1,000 and the cost is 900. Right, 752 it has increased to 900. The cost to ratio, no, the cost to sales ratio is now 0.90, that is 90%. Why this particular increase? Right, that is the pattern that we need to understand. This is how we actually, it is called fraud examination, and nowadays it's going to that level that forensic fraud examinations. So what they are saying is, it was the cost to sales ratio was 75. When the sales is same, what happens to the cost? How come it is increasing to 900? So there can be several natural options also. One, it can be increase in the price of your raw materials, increase in the price of the items that you are using for your product manufacturing. That can be a reason, right? Otherwise, it can be an tax fraud, can be a tax fraud. So that you need to identify. So this kind of a ratio and this kind of financial statement analytical review tools are there. You need to find out the differences and you need to justify it. Why is it happening? How is it happening? Right? And it's because of a tax fraud or price increase. The differences are this, right? Then another very important concept is about anomaly. Anomaly is right. Before that, right? Can you see this flaws? The list of flaws. Can you tell me? Is there any differences among these flaws? We have got a list of flaws. Can you see any differences? Dear participants, yeah.
Yes, sir. Yes.
Which one?
Yes, sir.
Yeah. Can you see different between these flaws? Any differences?
Sir, one of them has 3 leaves.
Yes. Right. How long did it take for you to identify this? Right. You could immediately identify it by looking at this, right? But if it is a big data, right? How are you going to deal with this? Not only that, right? So here the process is image. From the image, you are trying to identify a odd one out, right? Let me go with another example. Can you see this? Is there any pattern with these numbers? Is there any pattern? These numbers? Can you see this? Is there any pattern? Why is it 26 is different from others? Can you say that?
They have the multiples of 4.
Yes. So fraud detection is about identifying the pattern of behavior. It is about what kind of different anomalies you are creating from the users, from the frauds, fraudster. We can understand that what kind of pattern the person is creating. Here you can see that there will be some uncommon deductions you can come out with. Usually what happens, anomalies, the shortages in the inventory, right? That means as per the record, if it is 1000 and only 900 is there, right? There is a shortage. That is a cause for the fraud. And deviations from these specifications, whatever the specification is mentioned, how far it is deviating from the specification, everything should be on the specification. Whether it is getting deviated from the specification, if it is getting deviated from the specifications, then you need to be cautious. There can be a fraud. Excess scraps, when you find that all of a sudden the companies are coming out with a lot of registration of excess scrap, then there can be a fraudulent activity. And excess voids, if it is voids, why? You need to identify the reason. And non-correlated, non-financial numbers, right? These kind of investigations you need to take up. For example, the strange financial relationship, you see that the revenue is about 8% and account receivable is 30% and operating cash flow is only 1%. How come? The revenues in the 8% and the accounts receivable is high, right? Obviously your operating cash flow. So that you need to understand, and you need to go for non-correlated, non-financial numbers. How is it happening? Why is it happening? That we need to understand. And these are the operational level frauds. It may be happening, but when it is about management override, this is another tool that you can understand. See, WorldCom is a company, is a US company. What happens is they made a line of cost. Actually, this is one of the very famous scandal that happened with them. What they did is, actually, according to this terminology, expenses is about what are the expenses happening in a year will be denoted as whatever you spend in a particular year, financial year, it will be taken as a cost, it's an expenses. But here what happens is WorldCom has made several other ways, and they made it as a line cost, and what they are showing it to them, the clients that they have made a call to the third parties, whatever the call they have made to the third parties, that particular expenses, they made it as an asset. Right? There was a indication from that, and from this, the US government identified this. There was a line cost scandal. So you can see the deviations here. WorldCom cost of goods sold and industry cost of goods sold. The industry and the WorldCom, the company's sold level, right? How it is getting deviated when the industry is low. How come they are going up? So those identifications, those kind of investigations, they need to take up. Right. So these are some of the technical tools, especially in the financial perspective. This is an attitude that you are having as an investigative person. to identify the frauds. See, whatever the numbers you are having, how are you dealing with that? Is it logically correct? Is it acceptable? Right. So that is what we need to understand. Okay. So still the anomalies are there, right? And textual data. Not only the numbers. Before that, do you really understand the difference of anomalies? How it is going to impact the companies? Let me show you different anomalies are mostly misunderstand with the outliers. So let me show you what is outlier and what is anomaly first. So being a data analyst, right, we need to understand when you are given with a data set, right, whether it is it's an outlier or anomaly, right? Okay, so let me show it to you. Suppose 9,000, right? There are, you can see that the count is 9,427. Almost 9,500 entries are there, right? 9,400, right? Entries are there. That means we will take it as a loan. These many loans have been sanctioned. 9,400 loans have been sanctioned. And the average of this loan is 949. 949. How many of you agree that the loan that has been sanctioned to everybody is equal, right? And obviously we cannot have the equal sanction of loans as per their credit limit, credit policies, that we need to go for a loan sanction. That I agree. But here, using average is not going to help you. But anyway, what we need to understand is what is the deviation from the average, right? You can see that here there are some numbers. It has been sanctioned with 5.9. There are some numbers it has been sanctioned with $6,362, right? See, you say that all these segments are not in a highly deviated segment. You say that the order IDs from all these 9,000 people are from the more or less same backgrounds. Okay, their credit score is almost the same. We will take it in such a way, take the scenario in such a way, and in such a way, when these the CIBIL score or the credibility of these loan takers are same, then why there is a huge differences that we need to understand. Simply we cannot go with the. So usually what we used to do is we need to identify the outliers, right? There is a I'll show you how can we take up the outlier from these 9,000 entries first, and then I'll go with the anomalies next. Yeah, see, quartile one, and there is a technique called box plot. Using the box plot technique, usually we can visualize the outliers, right? So instead, what I'm going to do is instead of applying the data visualization, I want to know each entry whether it belongs to an outlier or it's a normally distributed one. So I wanted to check it out for that. So what I'm doing is here, so I'm taking a quartile one of this data entries. So I'm typing the formula quartile. I'm taking the sorry, it's getting stuck. minute, guys. The same problem is there. Okay. Once I'll try it. We'll do one thing. Since it is getting streamed when I'm entering. So what I'm going to do is, let me tell you first. Parallelly, I'll do that also. Now, just let me show you what I'm going to do with this data set. Is this. Okay. Configuring. Okay. Just give me 1 second. Let me run the code and I'll explain it to you. Meanwhile, if there is any questions you can ask. I'm just running the outlier deduction code because I'm not able to do it here. Right. Here what I have done is I have made this formula quartile, right? Here I have selected the entries and I have taken the quartile 1 of this. So in the same way, quartile 3 I'm going to take it. What I'm going to do is I'm going to select the entries. Okay. It's getting stuck, it seems. Oh my God. Same problem it is. Okay. It's not getting streamed. Okay. Let me move on to the slides itself and I'll explain that. So I was discussing about anomalies and outliers. See, usually what happens is when it is about outliers, we can go with quartile 1. Right? Usually in Excel, we used to go with an formula using, we'll be finding quartile 1 value and quartile 3 value, and quartile 3 minus quartile 1, it is IQR, that is interquartile range. So after getting interquartile range, I will be taking the upper limit and lower limit. So using these two, I can identify that what are all the entries are outliers, right? So with that, let me show it to you once again. How is it done? Just give me a second. So we need to understand that I was trying to show you differences, but okay, fine. I'm not able to work out that because when it is getting streamed, it's not getting worked out well. Okay, fine. So usually we need to understand that outliers are not anomalies. Outliers are different. Anomalies are different because outliers, it can be in the 2 standard deviation or 3 standard deviation. Within that, the deviations from your distribution can be within that limit, right? So it can be in such a way, but anomalies, it will be in a totally different pattern itself. For example, if you are manufacturing right 500 ml of Coke, right, there can be an outlier of 3 drops or maximum 1 ml of extra. That's all. So, but anomalies are totally different. The patterns itself, it will be different from your data. That we need to understand. So identifying those anomalies are very important when it is about data analytics to identify the fraud. In the same way, right, when it is about textual data, it is not only that you are using only the quantitative approaches for detecting fraud. Many of the times what happens nowadays, the company internals are allowed to monitor the email conversation of the employees and even financial transactions. Even you say that if it is a annual financial meeting and the participants are discussing about these words frequently: adjustment, anomaly, right, irregularities, inconsistencies, then there may be a chance of red flag. So wherever you find a different pattern, wherever you find a pattern that is totally away from the normality, right, then you need to understand that there may be a chance of fraud. So with all these data analytic techniques, right, the companies are engaging with identifying the frauds. So insurance companies, how one's filling online form, right? When you are taking too much of time, or when you are filling your online form itself, nowadays it's possible to take your online insurance. You can take up on insurance digitally, right? You can find it. So when you are taking up an insurance itself, right, they wanted to identify that in how long do you take to fill it up, right? And while you are filling it up, are you moving on to pages to page and you are looking at something, right? All these patterns of behaviors, they started monitoring, right? How are you doing it? Based on your way, the behavior that you are showing, it can be assessed whether it is a fraud or not. And customer service calls, sometimes, see, what happens is when a person is calling you and he is registering about an accident happened and he needs to make an insurance claim for that, or health insurance claim or life insurance claims, or if you are any kind of insurance claim he is making, from the voice itself they try to identify that what person he is and what he is speaking, voice pitch differences. From that, whether he is if there is some accident, he needs to be in a fright state, whether he is having that fear or not in the voice, whether he is having the stumbling or not, and how he is, right, and the way he is speaking, right, how true he is speaking, all these things are assessed, the fluctuation in the voices. So fraud deductions are happening not only in quantitative way but also in qualitatively, right? They are using your voice, they are using text, they are using image processing, right? All these techniques, NLP, you say that natural language processing, all these techniques they are using, right? Ultimately, the machine learning is going to be an ultimate supporter for these fraud analytics companies. They are using all these machine learning models to identify how far these fraudulent activities is taken up and how can you deal with that. Right, I'll tell you one more example, Uber fraud analytics. What happens is here, one person has ordered, right, just he hired on Uber, right, Uber taxi, and immediately he is getting an offer that if you book the Uber taxi through this link, you will be given with 80% offer, right? That means if the cost is 100 rupees, 80 rupees will be waived off and he needs to pay only 20 rupees. The person was very happy and immediately he clicked on that and he used the payment system. Everything was smooth. He paid only 20 rupees. He made the travel and after reaching home, after some time, he noticed that his bank account was hacked and his money was taken away. So third party linkages, third party links, you need to be very careful. So the companies also are focusing on the third parties, right? So whoever is, so nowadays what happens is if you are making on food delivery, right? If you are using a food delivery app, there you can see that third parties are coming in the line and they will be giving you the offers, right? So how, whether they are genuine or is there any fraudulent intention is there? The companies are trying to identify that. And rule-based approach. This is where we need to understand this. The algorithm written by the fraud analyst. Always what happens, the fraud analyst, what they are doing is based on some strict rules. They are not free to understand the situation. They are not free to make some algorithms. They are given with some preset standards. They need to go with the threshold standards and they have to create the rules for that. So what happens? Again, you are giving a limitations to the identification of frauds. So eventually what happens? The changes for detecting a new fraud are done manually because you do not give a freedom for the artificial intelligence or the machine to identify the fraud. This is the biggest problem. Even if you are adopting or if you are investing on AI process, artificial intelligence process, you need to let it learn and let it work on that because machines are learning accurately than human. So that's why what happens, it's expected that machine learning to happen accurately and you just, the fraud analyst need not give a much restrictions for the artificial intelligence to take up. So these rule-based approaches, what happens, they will give a preset rules and they will ask the machine to go with those rules only. This is a problem. And when it is about rule-based approach and machine learning, the traditional way for obvious and evident fraud, right? We know that once if it is, we know that a particular area is a accident-prone zone, right? We can sense it, but if you want to make it as a rule, right, we need some evidences. So once accident happened, only you can take a call on that. You can make a rule. So this is a traditional way of approach towards fraud detection. Manual work to determine fraud detection rules. You need to manually deduct the rules for fraud detections. It's not going to work out. And multiple verification that impacts user experience. Right? What happens? See, every time here another problem, right? This is another problem that you are going to face. See, you make your fraud deductions in a very proactive way, and in this what happens is it is going to affect your customer's experience. So what you need to do is you should not spoil your user experience, and you have to give a complete protection to them. The large transaction volume need further verification. You cannot take a much more time on that. You cannot individually verify everything. So you need to be very careful on this particular point. The traditional way of rule-based approaches towards fraud detection needs to be eliminated, and predictive analytics are using machine learning and deep learning. Nowadays, it's about artificial intelligence. So we need to take up those advanced level of technologies to identify the frauds. So in predictive analytics, what happens is it will detect subtle behaviors and correlations. So it will identify any kind of new anomalies immediately, any kind of new behaviors, and it will go for the making the correlations. If there is a correlation, immediately it will take a call on that. It is what happens is you make an automation on fraud detection, and it will improve the user experiences. If a user is regularly going to a shop and he is making a purchase through your payment, your payment wallet, right? A particular company's payment wallet, and he is regularly doing that, and it makes a behavior on that. It won't affect with that. But what happens is it will identify both. The user is regularly going to a shop and he is buying 500 to 1,000 rupees of purchase every time. But all of a sudden, if there is a 1 lakh rupees of purchase, right, immediately it will try to make a red flag. It will try to make a red flag that it may be a problem there, right? What I'm saying is it will try. Why I'm saying it is trying, because it cannot decide that it is not the person or the exact customer who is making that attempt to buy that. It cannot decide it. So what happens, it will try to identify that whether the real person is that, what was his last purchase, where he was. It will try to identify maximum the purchase is done by the original person or not, the original user. It will make a lot of permutation and combination, and it will try to identify whether it is a fraudulent activity or not. So it is much more accurate than the old, or you can say the traditional rule-based approach. So this real-time fraud detection is very essential nowadays. Okay. This is the framework generally adopted by many of the advanced tech companies. What they are doing is, they used to have three things, right? Mathematics, data, and computer science. That means here, I mean to say that it's a technology, right? It's a combination of these three. Here you need to have a business intelligence. That means management information, data warehousing, right? And mixing these two, you will be getting a business intelligence that needs to be verified with the artificial intelligence decisions, data science decisions. When you are mixing both and you are trying to identify a fraud activity, you can find a maximum accuracy on that. There is no 100% accuracy always. You are trying to achieve a maximum accuracy on that, identifying the frauds using the fraud analytics. Right. There are some of the examples for this. We'll go with that. Right. Just credit card deduction domain knowledge. Right. Usually, what happens is, if you are having a credit card and you are having a habit of spending it, right, and where you are spending it, how you are spending it, how much you are spending it, for years, as much years you are using it. For example, I'm using a 3 credit cards and I am not using 2 of them, right? It was 0 for past 6 months, right? Only I'm using only 1 credit card, that too every month it is 300 rupees only, right? In such a cases, right, it will identify all these pattern and it will identify my income pattern and my loan process, right? Whether I am in need of money or not, right? So from that, it will identify that whether a fraud has happened with the last transaction or not. So what happens is, no, not only that, some other insights also it can be taken from this kind of data analytics, that when it is about the spending pattern, you are trying to identify that what is the level of amount that can be spent by a person, but he is not spending. So you can push the person to spend it. So there are n number of customer activities and n number of offers you can push it to them, right? All these things are happening with the fintech companies. So what exactly is happening? Many of the fintech companies are concentrating more on pushing the customers to spend much, not on the fraudulent activities. So now it has emerged heavily, and they have no other way. They have to detect the frauds and they have to prevent the frauds. That's what they are doing it actually. Right. What business questions is it helping me to answer? Fraud detection analytics helps you to answer the business questions such as, are any of our customers engaged in fraudulent activity against your business? Right. For example, see, a normal person has taken a loan of 1 crore from a bank. Okay. And he is not having intention to become a defaulter, or he wants to pay it correctly. But what happens is, after few years, the value of that property is reducing to 50 lakhs. There is a huge reduction in the value. So as of now, he has paid only 20 lakhs only, right? As a repayment, he has made only 20 lakhs, sorry, 20 lakhs he has paid. So he needs to pay yet more 80 lakhs. He needs to repay yet more 80 lakhs. Right. With that, so now for this 50 lakh worth of property, he may think that, why should I pay this 80 lakhs? Instead, I can go and buy a much better property than this one. So he can become a defaulter in that scenario. So that the fintech companies needs to predict. They have to predict the future. So what would be the value of the property, the loan that you are giving on which property, and what would be the mindset of the person now? What will happen in the future if this particular scenario exists? They have to consider everything and they need to do that. So what happens is, in the AI enabled loan processing aspects, it will go with all these kind of combinations and correlation and relationship it will try to identify. So your customer itself will become a fraud in future, or he may be a fraud in present scenario also. Whether my customers are fraud or not, right? That they need to identify. Whether my customers are engaging with any kind of fraudulent activity, that the companies needs to monitor it 24/7. And are any employees engaged in fraudulent activity against your business? There is a high chance that the employees can engage with fraudulent activity. So the companies needs to monitor it 24/7 to understand the level of fraudulent activity, whether the people are doing it or not. As I told you earlier, right? Once the company has projected that they are very stringent with the fraud detection, and they are having a high investment on technological aspects on detecting frauds, then the internal controls are better, so they won't engage with that kind of fraudulent activity. And the third one is, are there any warning signs or patterns that indicate fraud is imminent so that we can intervene and stop it before it happens? This is the very important factor that the fintech companies needs to understand, right? So what kind of different pattern of frauds are happening around the world, that they need to upgrade themselves. They need to understand that if a particular different types of fraud is happening in some other country, it has been exposed, immediately they need to take a call on that. And in the present country also, they have to, in a different geographical location also, they need to take up prevention call on that, because as I already told you, it's a network, it's an organized network. So if it is reflected in one area, very soon it will be reflected in another area. So there is no geographical boundaries for this kind of fraudulent activities. And finally, social network analysis. This is one of the very finest technique. It has been heavily used in the fraud analytics platforms in the present scenario. You can identify that there are n number of ways you can identify the homophily and who is the most influencing person on the fraudulent activity, whether where and all. See, for example, if you have a different clusters, you say that in your customer database, if you are having different clusters, each clusters is going to connect with these clusters. It may be connected individually or with anybody, right? Okay. If you identify that in one cluster, you find one kind of fraudulent activity, where and all it has been connected. If you find here, there is one kind of fraudulent activity. Here, who and all is connecting with this particular cluster. A person from these two places are connected with this, then immediately you need to take a call on these two clusters also. You need to monitor them, right? In such a way, we need to identify the frauds and we need to prevent it, right? So these are the very advanced techniques, very common techniques. I cannot say that it's an advanced, yet more advanced techniques are there. So I can say that it's a very common technique that are used for fraud detections and fraud prevention aspects. So with that, thank you so much, and I would be happy to give any kind of answers, any kind of discussions. And I was trying to show you about that differences between these two, the anomalies and outliers, right? But because of the streaming issues, I was not able to show it to you. But anyway, I'll share the way how it can be done. I'll share it through Naveen sir to all the participants. I'm open for the questions, sir.
Any question, participants, if you have, so you can ask from sir. Okay, I think no question.
Yes,
from
sir.
participant side. It's already lunchtime, so
Yeah, I can understand that.
yes, yes. So thank you very much, sir. Let's close this session, and hope we will meet again and with some another sessions.
Sure, sir. Sure. Thank you so much.
Thank you very much.
So much, sir. Thank you, sir.
Thank you, sir. Thank you, sir. Session
Thank you,
was really
ma'am. Thank you so much, ma'am. Thank you.
So participants, we will close here, and we will meet again in 3:15 for the validatory session. So kindly join the validatory session, and followed by the test. So we will have quiz at 4:15.
sure, sir. Sure, sir.